Hey everyone, and welcome to today's video where this time we're going to be looking at Bitcoin, a bit of history, a bit of investing, and discussing whether now is the right time to be investing in Bitcoin. Now I know this is a departure from KDP Books and Publishing, but as I say at the beginning of most of my videos, these are about how to make it, keep it and grow it, and that's your money. So this comes into the keeping it and growing it section. Now if you are interested in that type of thing, and if you're also interested in publishing books on Amazon to make an income, to potentially invest in various things, whether it's shares, property or things like Bitcoin, then give it a like, hit the subscribe button and also smash the notification bell to receive notifications of when I produce more videos like this. So why should we be looking at Bitcoin at the moment? Well, interestingly, it's the best performing asset of 2020. May this year it just overtook gold as the best performing asset. Now it's becoming increasingly popular in the media. There's a gradual increasing in interest in Bitcoin, and part of that is because of something called halving, or the halving, which we will come to in greater detail in a moment, but this can have a significant impact on the price. And the other thing is, unless you've been living under a rock, there's a potential financial crisis looming, one bigger than we've experienced already over the last couple of months, and that's because of a number of things. One is potential increases in unemployment, businesses going bust, increasing quantitative easing and all the things like inflation that's associated with that, which could potentially all combine to produce a quite significant financial crisis and another big crash in the stock market. Although when these things are predicted, they tend rarely to happen, but I think, you know, this could be a perfect storm of things happening. So who knows? It's difficult to predict, so it's always worthwhile looking at spreading your risk around, and Bitcoin for me is something that I seriously consider. Now, just a little thing before we go on. I'm not a financial advisor, and this isn't financial advice. This is just about Bitcoin and what I'm going to be doing. In fact, I'd probably recommend not following me at all on any financial advice that I give if my past performance is anything to go by. Although having said that, I have been successful in the past in investing in two things. One was gold. That was in early 2000s, and the other is Bitcoin back in 2017. Now, I first heard about Bitcoin in 2009, and that's when it was sort of invented, if you like, in January 2009 by a mysterious chap called Satoshi Nakamoto that nobody knows who that is or who his identity is. He's a mysterious fellow. Although there are conspiracy theorists that say that Bitcoin was actually invented by the CIA. But who knows? It's there, and it's been around now for 11 years. So I first came across it in 2009. I considered investing in it then. Why didn't I? Well, actually, the main reason was because some years before that, I'd bought and invested in something called e-gold, which was sort of one of the earlier online currencies. And there is also rumours that the person that invented e-gold may have been responsible for inventing Bitcoin. But I'd also bought e-gold in the years prior and invested in it and didn't get anywhere with that. And I just thought it was another form of e-gold. So largely ignored it, and then a few years after that, I did consider perhaps trying mining it just out of intellectual curiosity. Again, never did it. Why not? I'm a fool. But anyway, we get to 2017, and I'm listening to an audiobook called American Kingpin. Now, if you've never read this or listened to it, you must do. It is fantastic. And it's about a chap called Ross Ulbricht, who created a site called the Silk Road on the dark web. And this was almost like an eBay for illegal stuff like drugs and weapons. And he received all his money in Bitcoin, which was eventually confiscated by the feds. So that sparked my interest in Bitcoin, and I thought I'll look further into this. Oh, by the way, if you've never read American Kingpin, I'll put the link down below. Really, it's brilliant. It's interesting, and if you're into sort of technology, computers, hacking, money, it's well worth reading. So anyway, so I became interested in Bitcoin and started to look more and more into it. And I thought I'd give a go at investing in it. So I bought myself one of these. It's called a hardware wallet. This one's a Trezor. I think it's a Trezor 1. And I also around the same time bought this one, which is called a Ledger Nano S. And you can still buy these on Amazon. I'll put the links below. I think the Trezor 1, if I have a quick look, is around about $35 for a Trezor 1. I think they've updated it now to the Model T, which has got a colour screen. And also I think the Ledger now comes as a Ledger Nano X, which is $119. If you do consider investing in Bitcoin or any of the other cryptocurrencies such as Litecoin, Ethereum, Monero, although Monero you couldn't put onto a digital wallet, then if you're considering investing in those, then getting a hardware wallet is vital to keep your Bitcoin safe. You can keep them on what's called a software wallet, but they're not as safe and can be potentially hacked into. Some people keep their cryptocurrencies on trading platforms like Coinbase. Again, these can get hacked into and you can lose all your money. And this has happened into the past on various different trading platforms, and people have lost millions. So it's well worth just investing in something like one of these, relatively simple to use. So I bought one of these hardware wallets, and towards the end of 2017, I think it was about November 2017, I started to buy some Bitcoin. And around that time, I think the price went from something like $5,500 all the way up to $21,000 over a matter of like 6 weeks. It went crazy, and my paper profits were fantastic. But like any form of investing, it's not always when to get into the market, it's when do you get out of the market. And in retrospect, you can look at all the graphs you like and go, yeah, I would have got out at the top. But that's very difficult and almost impossible to get out of the top. And when you combine that with the emotions of fear and greed, you can watch your profits drop and drop and drop and drop. And that's what's happened with me and probably a lot of other people. And yes, I made a profit, but nothing like what I could have made. And soon after that, a few months after that, I took all my money out completely, and I've not invested in any cryptocurrencies since. But I've kept an eye on the market. Now, as I said, Bitcoin was invented by Satoshi Nakamoto. Now, Bitcoins are mined very similar to gold, but instead of using picks and shovels like you would to mine gold, mining Bitcoin involves computers and involves complex mathematical algorithms, and they create these blocks in which contain these Bitcoins. Now, when it first came out, there were, I think it was 50 Bitcoins per block. And what happens is every so many blocks it halves, and this usually works out to around every 4 years. The number of Bitcoins per block halves. So it went from 50 to 25 to 12.5 to now, recently, I think it was last week, the number of Bitcoins mined per block is 6.25. Now that has a number of effects. One, there isn't as much Bitcoin being mined. Some of the miners, it now doesn't become financially viable to mine these coins, so they stop mining. And so this can combine to increase the price of Bitcoin. And also, if you combine that with the overall limited amount of Bitcoin that's ever going to be mined, which is something like, well, it's 21 million, not something like, it is 21 million, then you've got an asset that there's going to be a fixed quantity of. And so as more people want to buy Bitcoin, the price actually starts to increase. And it's opposite to the inflationary result of things like quantitative easing, where money is just produced and it becomes fiat currencies like the dollar, euro and pound become worth less. Bitcoin theoretically is deflationary, so should increase in price. So let's have a look at the graphs just on the halving, just to show you what I mean. So here is the price of Bitcoin from 2012 all the way up to the present day. I think it's just a couple of days behind, that's all. Now on the right hand side here we've got the price of Bitcoin. Now this is a logarithmic scale, because if we had it in just a normal scale, it would start very low and then would shoot off upwards right off the chart, and we wouldn't really be able to visualize it. So using a log scale is a better way of visualizing the share price, or the Bitcoin price, I shouldn't say shares. So let's get my pen and have a look at this chart. So around May, which is around here, we had the halving, which would have been the second halving. And we can see the result of that over a period of around 18 months. We can see that the price increased. And then we had this period where the price dropped and then sort of hovered around sort of level. And so normally in short share talk, this is called consolidation. So we've got around here. So now in 2016, around May that year, we had another halving. And you can see what happened to Bitcoin price again over around about 18 months. It increased up to its highest price that it's ever been, which is it was around about 21,000 US dollars. And again, we're now looking at a period of consolidation, and this brings us up to around this point here, where we've experienced another halving, which was the fourth halving. So if Bitcoin, I mean there's no guarantee, but if Bitcoin was to follow along this same path, we may well see over the next 18 months an increase in the price of Bitcoin. As I say, nothing is guaranteed, but often if you want to try and predict what's going to happen in the future, you just need to look at what happened in the past. So I'll just hide that layer for a moment, because I will also want to show you something else that's quite interesting with the price of Bitcoin. If we draw a line from the peak of the price and just draw this sort of downwards, excuse me, I can't draw a perfectly straight line with this. We get this downward sloping line. Use your just imagination slightly. And if we go from down here, sort of around about the trough of the prices, and draw a line upwards, we sort of get this. Again, I should probably just draw that slightly lower. And we get this triangle formed where the price has gone up and down, up and down, up and down, up. And you can see that the price is the distance, or the prices between the peaks and troughs, is getting smaller and smaller. And often what can happen is at some points the price can either shoot upwards out of this triangle or shoot downwards out of this triangle. Now if we're saying that Bitcoin could possibly move up, go up out of this triangle and start increasing over the next 18 months, well, there's a way to predict the potential target for the price, and that's to take the price difference between the trough, the lowest price, and the highest price, which, just looking at it here, is probably around the 20,600 mark. Okay, so this is called technical analysis, where you're looking at charts and prices, and this applies to stocks and shares. So potentially we could go from around the $9,000 to $10,000 mark all the way up to the $30,000 to $31,000 mark. And so people that really go along with technical analysis would have that as their target price, something like $30,000 to $31,000. An increase to that price over the next 18 months. So the potential there, if you're looking at that to say, okay, I could potentially treble my money, get a 200% increase in my money. So for me, I've done a lot of work on charts, technical analysis in the past, and that combined with the fundamental analysis, the fundamentals of Bitcoin, what's happened in the past, and the reasons, sound reasons of why it could increase. For me, that's enough to look at this once again as an investment. Because at the moment, I don't hold any stocks and shares. I put all my money into cash just after the stock market sort of started to take a dive. And I want to put my money somewhere that's safe and has a potential to grow. Now, the price has increased recently, and there's, again, a number of reasons for that. As I mentioned earlier, the halving, the limited supply, unlike fiat currency where quantitative easing, the banks are just printing it like willy-nilly. And people are also now starting to move their money out of traditional assets, shares, property, and are also looking to put it into other assets that are potentially increasing in price. And there's also the issue of trust. I remember when I invested back in early 2000s and I had money in some assets, I think they were ETFs, particularly in silver, they're exchange traded funds. And AIG, the big insurance company, was on the verge of going bust. So they stopped their operations. And as such, I couldn't trade in my ETF for about 2 months, and that was sort of quite a worrying time when you've invested your money in a share, and it's locked in there, and you're not sure whether it's going to disappear or not. Luckily, it didn't. But with things like something like Bitcoin, I like the fact that there's a trust there, and it's pretty safe, and I'm in control. And often with prices of assets, it'll go up and down, and a lot of it is dependent on fear and greed. And I think there's a lot of fear at the moment in the market, and I think fear is also fueling this recent increase in Bitcoin. So what am I doing? Well, I'm firing up the old Trezor again. I think it needs a software update, so I'm going to do that. I'm going to transfer some money across to the trading platform. Now, I've not decided yet when I'm going to do. I'm not going to invest a whole lot at once. What I'm going to do is invest a regular amount every month. As money comes in from my KDP books, I'm going to invest that into a regular amount. Now, I've not decided whether that's going to be $500 or $1,000 a month yet. But I'll decide on that, and I'll let you guys know, and I'll keep you updated on what's happening with that. Because I'm not discounting shares either at the moment, particularly dividend producing shares. Again, it's very dodgy, but we'll also be looking at that. And also, just a side point, why am I doing regular amounts? Well, it's called dollar cost averaging. It's where instead of trying to predict the lows where you want to buy and predict the highs where you want to sell, you just invest a regular amount over a particular time. So sometimes you'll get in at a very good price, sometimes you'll get in at a higher price, but overall, if you're in this for the longer term, then you should hopefully see an overall increase in the value of your assets. Like anything, like any investment, do your own research, do your own due diligence before you get into this. But I hope this gives you some useful information on Bitcoin, all right? And yeah, let's see how it goes. Fingers crossed. And that's it for now. Remember, hit the subscribe button. Give it a thumbs up if you liked it, and also smash that notification bell. And until next time, goodbye.